We were discussing about revenue and quality of the revenue. Now, there has been a tweet by somebody I don't know, and he says Sangvi Mover spoke to NDTV Profit, where they say that the key takeaways is they have ventured out into the EPC business, which will contribute 30% to the top line in next 2-3 years in the crane rental business, and EPC will be at par. So crane rental business revenue is going to go up by 30% in the next 2-3 years, but the EPC business profitability would be at par. Blended margins would be lower with inclusion of the EPC business. So that means I am going to get revenue where my quality of the revenue is would be lower than my quality of the revenue which is already currently there into the business. Concept of commissioning model where IPP will be choosing WTG model and Sangvi will undertake the entire execution of building of a wind farm. So earlier they were just setting up, giving the cranes to set up the wind farm. Now they're going to do all the things. EPC margins in double digits, but significantly lower than the crane rental business, which is bad. What we were talking about? 450 crores of capex in the next year, 30% internal accruals and 70% in long-term debt. So the company is going to overload the balance sheet now. Debt to equity ratio will remain in the similar ways due to the high cash generation. The yields on crane business will be maintained despite of capex because वो तो अलग ही चीज़ हो गया. 85% utilization is practically considered at peak utilizations. Management statements provides comfort to your early view that the potential PAT can be 350 crores by 2026 and maybe beat the street. So this is what the management had to say.
They've done roughly 400 crore of capex versus the 450 crore that they've guided for the full year. Now, the other piece, of course, is they ventured into EPC. Very small component, especially in the first half of FY24. But what are they going to do in the second half? We have with us Rishi Sangvi, who's the MD at Sangvi Movers, now joining us. Firstly, welcome to the show, sir. And
I'll post this video so you can have a look at what Mr. Rishi Sangvi for Sangvi Moves has to say. And if you see the stock price is going up and up. So it is very difficult for an analyst or the investor to sell when your stock prices are having a lot of momentum and having a lot of strength. So take your call.